Hello everybody, this is StockerFinance. I am your host David Scheuer, and let's just go ahead and get into it. So today we're doing an earnings recap. The earnings this week was all over the place. It was awesome. And I'm going to be talking about and giving a summary of each of the companies that I followed in this short video here. So you don't have to go listen to the whole earnings call. You can just get the details right here in this short little video. So I'm only going to do it for the companies that I personally followed. There was a lot of earnings this week, so if you weren't able to, or if you have companies that I don't talk about here, I'm sorry about that, but I can only listen to so many calls, I can only read so many reports, and I only have so much time, so I'm only going to talk about the ones that I'm going to talk about, or that I was watching, and I'm going to go ahead and throw those up here, so you don't have to waste your time trying to find out about which ones I'm going to talk about. Anyways, let's go ahead and get into it. Let's start off with Snap. So Snap beat earnings. It expected a EPS of negative 0.05 per share, and its actual earnings per share was negative 0.04 cents. So not bad at all. Its revenue is up 50% year over year, which was massive. It added 7 million daily active users. It's continuing to innovate. And what I mean by innovate is they're trying to find new ways to advertise on their platform, as well as attract other advertisers. And they're also innovating by implementing... Oh, geez, sorry, I almost died right there. Anyways, they're also finding ways to innovate by implementing augmented reality into their platform and into the spectacles glasses that they've been producing as well. So nothing but good stuff there. The market reacted a little bit shaky to it. The guidance, I think, might have been not exactly what people expected, or maybe the earnings weren't exactly what all the analysts on Wall Street wanted to see. But as far as I'm concerned, I felt great about the call. There's nothing but good stuff there. And yeah, I don't know what else to say about Snapchat. So let's move on to Ford. So Ford had a very interesting earnings call, to say the least. They actually beat earnings. The earnings per share was the expected earnings per share was 0.26 cents, and the actual was 0.34 cents. So that's pretty good. Yeah, they beat it by a decent amount there. However, what was bad about this call was the outlook and the guidance. It was absolutely awful, to be honest. They not only lowered their profit by $1 billion from about $7 billion to $6 billion for the next quarter, which is a pretty massive amount, but they're losing and have bad demand in China, and the guidance is only worse for that. And there's also a potential union strike coming, which never looks good, especially, if the media shines an even worse light on Ford right now. They already had that subpar rating come out. So it's not looking super great for Ford right now. And with this bad guidance, it really just kind of put the cherry on top. We'll see what happens there. I'm going to keep an eye on Ford as a company. But so far, it's not looking good. And it probably didn't help, and we're going to move into Tesla here, that Tesla did super good. So you've probably already heard Tesla destroyed their earnings this week. And their earnings were directly after Ford. So it probably hurt the Ford stock even more because Tesla did so good. And obviously Tesla's a direct competitor of Ford. So Tesla destroyed earnings. They had expected earnings per share of negative 42 cents. And their actual earnings per share was $1.86. That's incredible. They destroyed the analyst expectations. I was obviously jumping out of my seat when I heard this. Not only this, just the whole call was nothing but good. The guidance was excellent. The Gigafactory in China is coming along phenomenally. It's ready much earlier than expected, and they're already rolling out prototypes on the floor. You've probably seen pictures of stuff going on there if you follow Tesla or if you're invested in Tesla. And the Model Y also, its production got moved earlier from fall 2020 to summer 2020, so that's fantastic. Because now, not only are we getting the Model 3 rolling out in China earlier, but the Model Y is going to come out earlier all over the place. So it's really just looking great for Tesla. They're also profitable once again, and hopefully it'll stay this way since their guidance seems to be very good. And the demand remains super strong. Elon was saying how they still have a massive order backlog for the Model 3. So all the demand theories about Tesla, or people not wanting Teslas, or Tesla not having the demand that it claims, it's just not true. They still have a significant amount of demand, so much so that there's a backlog, and an even growing, it's still growing, the backlog for the Model 3. So, another great news this is awesome about Tesla, is that full self-driving is potentially coming out sooner than expected, and they might have their early testers to start using full self-driving, which would be awesome. There was also a small update coming out for Model S, X, and 3 soon, which is going to make the charging faster. It's going to make the cars more efficient, etc. So we'll see more about that update when it comes up, since you just briefly touched on it. So I don't want to say too much there. But other than that, there's a bunch of other little things, and I'm not going to mention it in this video because it's just too much all at once. But if you want to watch my full review and analysis of the earnings call, go ahead and check that video out. It's a little longer. It's about 20 minutes long, but you won't be disappointed. I break down everything for you. And yeah, all right, let's get into the next one here. Microsoft. So Microsoft beat earnings as expected from 124 to 114. So yeah, not bad at all. Anyways, it beat on revenue as well. Honestly, just overall, Microsoft was great. There's not much to it. They talked about, you know, to be honest, the earnings call was a little boring, not going to lie, because just everything that was expected. They just did great as a company. The stock was pretty unmoved afterwards. Not too much there. Azure growth slowed a little bit, but the cloud-based, it still boosted earnings by so much that I think that's the reason they beat the expected earnings, was because of that. Cloud, even though the growth slowed, the earnings still went up because of that. So, or not because of that, but it still had higher earnings in that sector. That's what I'm trying to say there. Anyway, so yeah, overall, Microsoft's doing well. There's not really much to say about that. Guidance looked good as well. And yeah, that's about all there is to say. Anyways, Amazon. So Amazon is on the opposite end of the spectrum here. All of the ones I've talked about beat earnings. Amazon got destroyed. You may have heard this. They had a pretty disastrous earnings call there, to say the least. They missed earnings for the second quarter in a row, which is already bad luck. And then the expected earnings were $4.60, and the actual earnings per share was $4.23. So pretty devastating, not going to lie. This was partly because of higher costs from the one-day shipping they implemented, as well as a lot of their Prime stuff. They've just been rolling out a lot of new things, spending a lot of money on the new TV shows, on a bunch of stuff, just to kind of make stuff more efficient. And it's a long-term plan. I don't normally agree with analysts and people who, you know, write articles for CNBC and stuff. I usually am on the opposite side of whatever they say. But in this case, I have read some articles saying that, you know, Amazon and Jeff Bezos, it's a long-term company and they're thinking into the future, and I completely agree with that. They might not, their guidance was also bad, and it was honestly pretty bad, especially during holiday season. So I think Jeff is just playing the long game here. However, if you watch my video about Amazon, I do worry a little bit because Amazon is getting quite a bit of bad press, especially from the Democratic Party. And coming into the 2020 election here, we're going to see what happens with that. Since Amazon has been getting a lot of crap, to say the least. So anyways, that's all. This is a summary. That was the earnings week, the weekly earnings week recap. As you can tell, I am super tired from this whole week. Not only was it earnings week, but it was also midterms at my university this week. So it was double tough. Yeah, I've been on caffeine, little sleep. It's been perfect. But I hope you guys can subscribe. Make sure to hit that like button. And if you have any questions at all about anything related in this video or anything related to personal finance or investing, go ahead and drop your opinion or question down below in the comments, or you can tweet at me at StockerFinance. I'll see you guys in the next video. Peace out.